So, of course, after Friday's crash, there are every analyst is basically commenting on what they think happened. Seemed pretty clear to me, my take anyway, is that this was a bailout for the banks that were caught in their short position. Um, that being said, let me just quickly recap what I think is going on. Um, and you could say this either started in 99 or 2001, gold double bottomed at 255. This is the first leg of a secular long-term bull market. Between that first leg, there is a cyclical bear market. This was an 8-year cycle low here. This was an 8-year cycle low here. So this 8-year cycle topped right around the midpoint at about 4 years. And then we had this cyclical bear market for 4 years. And then you start the second phase of the bull market. And these long-term secular bull markets usually unfold in 2 phases. And I will say this one might have a third phase. I'm willing to give that the benefit of the doubt. And I'll go into a little more of that later on in this video. But this was a cyclical bear market within the context of a long-term secular bull market. So the second phase of the bull market started here in October or November, whenever it was, of 2015, when this cyclical bear market ended. Started off pretty tepid, with a marginal breakout here, but a little too late in this 8-year cycle to get a sustained move. And then we start the declining phase of this 8-year cycle, get our 8-year cycle bottom right here. Now this 8-year cycle, much different. We break out above these resistance zones, but we do it very early in this 8-year cycle. And that's why we have this huge sustained move. And you can look at this chart and see this is different. This is not similar to anything that has come before. This is a parabolic move. Parabolic moves are indicative of a bubble forming. And we certainly are forming a bubble in the metals. Now, I will say it might be that we form a bubble pops, we have a huge crash, probably come back down, test the 200-week moving average, maybe even go below it. But then it turns into just a cyclical bear market, the same as this. And then we have a third phase to the bull market instead of just 2 phases. I'm open to that possibility. So now I'm going to move over to silver because this tends to be a little clearer in the silver market. During a bubble phase, at least let's say the last 2 so-called bubbles, one in 1981 and 2011 in silver, there was the bubble phase, quote unquote bubble phase, parabolic move, unfolded in 2 parts. So you get the first part of the rally, and then there's a correction between the first part and then the second part. And the second part can be much bigger than the first part of the bubble. And I think that's going to be the case here. So I think this rally to about 120, whatever it was, I think this is the first part of the bubble, so to speak, and it came with this breakout above 50. I think the suppression in metals ended here when the banks couldn't hold this below $33. This kind of started the move, and then you had that major 45-year resistance at $50. Broke out, drove it back below it temporarily, couldn't get any traction, broke out again, tested it, and then we're off to the races. As the short squeeze clamped down on the banking cartel. And they were just losing billions here. They needed a rescue. That's what Friday was. It was a rescue for those short positions. There was a lot of contracts that were going to stand for delivery this month. I was I didn't think that they would be able to manufacture this. I thought the buyers would be able to stop, and they have been. The buyers have been able to stop pretty much every attempt to suppress the silver market on the way up here. So I was under the impression they were not going to be able to pull one of these off, but lo and behold, they did. Um, but this just guarantees that the final move is going to be all that much higher. So my my prediction is 250 is probably going to be a piece of cake, and $500 maybe a long shot possibility. This suppression right here puts the odds of $500 much better, because it's going to bring in a lot of buyers that will make the supply, shortages even worse. People are getting a gift to scoop up even more physical silver and make the shortages even more extreme. So ultimately, this probably allowed the banks to escape from the shorts, but it's probably improved the odds of $500 instead of $250, much more likely at this point. Now, let's look at this a little closer. Now, what should have happened? If this had been allowed to progress naturally, then what would have happened was we would get a short pullback here. We'd come up, probably made a little bit higher high, and then formed a rounded top, and then a normal correction, which was always going to happen. We were always going to have a normal correction, but a normal correction that would have probably bottomed maybe in March or maybe in April. Probably bottomed around 100, maybe, extreme scenario, maybe 90 would have been the bottom. But that would have been a natural correction. What should have happened naturally, and then we would kick off the second phase of the parabolic bubble phase. Well, that wasn't allowed to happen Friday. The banks needed to be rescued. We get this huge, massive crash. I think the banks started covering their positions here. That's why we didn't end near the lows. And I think this is probably going to recover very quickly. That's generally what happens in a bubble, and that's the reason the public piles in. And that's what drives the second part of a bubble is you'll get some kind of scary correction, but then it recovers very quickly and gets back up to the old highs and breaks out really quick, and that convinces the average Joe six-pack that there's no risk in the market, and so you get unsophisticated traders that have no idea what they're doing. They start piling into the market, and they've got FOMO, and so they're hitting the ask, and it doesn't matter how big the spreads are. They just need to get in. And that's what drives that second part of the bubble phase, and that's how you can get a move from $100, $120 silver to $500 silver in 6 months. And so I think this is what's going to happen. We were always going to have an intermediate correction here. Normally, it would have occurred as a rounded top and then a bottom in March or April, and then we would be a pretty quick recovery. General public comes in, you get that second part of the bubble, huge move to $250. But I think probably what's going to happen now is this is going to recover much quicker. My prediction is that we'll probably be back up here testing these all-time highs by the end of February, and it might even occur even faster within 2 or 3 weeks. If that happens, that the general public is going to start to pile in to this market, and then the second part of this bubble will be on its way. And now let me discuss the possibility for a third phase of this bubble. So in order to do that, let me go over to the stock market. All right, so real quickly, here is a 4-year cycle low. I think this is probably a short 4-year cycle low. We've got so much volatility in this market, it's a little hard to tell, but this seems a little too stretched to me at 5.5 years for this to be the 4-year cycle low, and it didn't even come down to actually tag the 200-week moving average. So I think the correct call is that this is a slightly short 4-year cycle low, and that opens the potential for this to be a slightly long 4-year cycle low that may bottom. You know, the normal timing band would be in October of this year, but it might stretch into the spring of next year. But I think what looks like it's going to happen already. You know, we had this huge move up out of this bottom last year, but it's stalled, and I think it's going to remain stalled. I don't think we're going to get any huge sustainable moves, and we may get a rounded top as we move into the midterm elections. So money's just not going to be treated very well in the stock market here as we stall, maybe start to roll over, and then we'll get that move down into that 4-year cycle low. And so if people quit making money in a market that has stalled and is going nowhere, they're going to look for something that's trending. And especially if this correction in metals recovers quickly, that is going to be the metals market. And so you're going to see liquidity start to come out of the stock market that's just not doing anything and is stagnant, and go into that second part of the bubble phase in gold. And then if the stock market does start to roll over and start to move down into that 4-year cycle low, even more liquidity is going to come out of this and push that second part of the bubble in metals, because that's where the capital will be treated well, is in that fast moving, fast rising second part of the bubble in metals. But then there's going to come a point where the selling pressure is so great at these 4-year cycle lows in the stock market that it starts to infect everything. You just start to get margin calls everywhere, and people sell any and everything to meet the margin calls. That's probably the trigger for the parabolic phase in gold to end, and then we get a huge crash in not only in the stock market but in everything. And that would include gold, which would be in a huge parabolic move, insanely far, stretched insanely far above the long-term moving averages. And now let me go back to gold. All right, so here you can already see how far gold is above the 200-week moving average. It's, compared to anything that's come before, this is, unprecedented. But what I think is probably going to happen is we finish this parabolic move into the end of 2026, or maybe into early 2027, and then we get the crash in everything as that 4-year cycle decline. The selling pressure infects everything from the stock market, including collapsing the bubble in gold. And then the next 8-year cycle low is going to be due. Here was the last one in 22. It's going to be due in 2030. So I think you have probably at least a cyclical bear market into 2030 in gold from that collapse. It takes a while for the crash to stabilize, base, and then start up again. But I will say that I'm open to the possibility that this could just be a cyclical bear market, similar to what happened into that from 2011 to 2015. Could be the same, and then we quickly start another, or we continue the secular bull market from 2030 on. So instead of only having 2 phases to a long-term secular bull market, I am open to the possibility that we might have 3 phases to this bull market. But this is clearly a parabolic bubble that is forming. I'm just not, I'm not sure whether this is the end of the 26-year bull market, and then once this bubble collapses, that we're going to have another 15 or 20 year long-term bear market like we had from 1980 to 2001, or whether this could just be a cyclical bear market that only lasts 4 years, 3 or 4 years, and then we have another leg up in this long-term bull market. I'm open to that possibility, but for right now, we are definitely forming a bubble phase. We are definitely in the corrective phase in between the first part and the second part, and I think we're going to recover very quickly from this correction, especially since it's been massively accelerated by that um, bank rescue on Friday. And when it does, then that's going to inspire the general public to pile in, and that'll drive that second part of the bubble phase that as I've been saying, the amount of money that's been made during the first part of this bubble has just been mind-blowing, but you haven't seen anything yet, especially because this suppression is just going to make it go that much higher. The second phase of the bull market will be something we have never seen before and probably will never see again. So we are getting a once-in-a-lifetime, maybe a once-in-a-100-year opportunity. Thanks to the banking cartel needing to be bailed out, I think they made it even bigger than what it would have been naturally.